Welcome, everybody. My name is Richard C. Wilson, founder of the Family Office Club, and we're excited to have with us here today Ross Tompkins, who is the head of Balmoral Partners. Interestingly enough, they're one of the few members of our investor club focused on healthcare. Many times we have real estate firms, manufacturing companies, private equity groups that are diversified across many industries. But Balmoral is focused on healthcare, and they're based out of Europe. And I have with me here, Ross is going to introduce their team a little bit, their strategy. Welcome, Ross.
Thanks very much for having me, Richard. I'm looking forward to it.
Yes, and I know you have over 35 years of experience in healthcare, and you've helped close a couple dozen transactions in the space. Can you talk a little bit more about your background, how you first got into the space to begin with?
Yeah, sure. So by background, I'm actually a physiotherapist. So I trained in the 90s, or a physical therapist, I think you call me on that side of the world.
Sure.
Started off in the NHS, which is our free healthcare system over here in the UK. And after only 18 months, I realized it wasn't for me, and I wanted to be a little bit more, I wanted to spend a bit more time with people and really make a difference.
Sure.
That quickly led on to me realizing I needed to be my own boss. So I started my first business back in 2006, which was an occupational health business. So OSHA, on your side of the world, we employed doctors, nurses, physiotherapists, and helped large employers keep their staff healthy and at work. Now, we grew that up quite steadily over a number of years until eventually we sold that business. And that really was the catalyst where I realized that you could buy and sell businesses, and you could see exponential growth in an afternoon, as opposed to, decades of hard work going through that same sort of growth period. So since then, as you alluded to before, we've done over 20 transactions in the UK and Australia, and then I'm looking to continue that through into the US and further afield.
Okay, great. What's the regulatory framework like there in the UK? Because, in the United States, there's certain rules about owning medical practices or certain types of medical businesses. How complicated or challenging is that for you?
It's different all over the world. So everywhere's got its own version of the legislation and red tape. But as long as you're comfortable with it and okay with it, it doesn't really generate too much of an issue. Same as in the US, where you might have to have a physician that oversees prescribing protocols, or a pharmacist. It's the same in the UK.
Okay.
We just have a regulatory body. We have the MHRA as opposed to the FDA.
Okay, got it. And then what about your geographical focus? Where are you really looking for acquisitions or investments?
So up until this year, all of our acquisitions had been in the UK. And this year we've placed our first investment into an Australian bariatric company.
Oh, okay.
Looking quite heavily at the US for a number of years. Haven't quite got a deal over the line yet. And Balmoral Partners, we actually incorporated in the UAE in December of last year. So we've got a much stronger focus on the Middle East as well.
Okay. And what about healthcare related artificial intelligence or robotic investments? Is that an area that you're excited about, or are you avoiding it for some reasons?
Super excited. Yeah, I think any company that doesn't embrace AI right now is probably making a mistake.
Right.
You could be fearful of it, or you can embrace it. And I think, if you embrace it, you've got a choice. You can either say acquire a company that has 10 staff and get rid of 9 of them, because one of them can probably do the work with AI, or you could take that same company and make those 10 people do the work of 100. And we're definitely looking at the latter and trying to enrich people's lives, grow companies, grow the headcount, rather than cull people. I think you can do both.
Right. Yeah, makes sense. And I know when we connected a few weeks ago, you're giving examples of some minority equity deals. Sometimes when people think of private equity, they think of buyouts, 50% more equity. So they control the exit. They maybe can control the hiring and firing and strategy with a strong hand. Why have you gone the minority route? And then how do you influence the exit and what happens after the investment as a minority investor?
So our typical structure is somewhere sort of between 10 and 50%, where we'll come on board more of the strategic advisors. So it's companies that know they are destined for more, but they don't quite know how to do it. So they're looking
Okay.
for access to capital, or they're perhaps looking for expertise, networks, relationships. And that's what we've realized over the last few decades that we're good at.
Okay, makes sense. And then what about unique edge in terms of what makes you different than other healthcare investment firms? Obviously, being open to minority investments separates you from some. What else really sets you apart when you look around at others in your space?
I think the biggest thing is actually the intimate knowledge that we've got of the healthcare space. Now, healthcare is for many people seen as a recession-proof business. So a lot of funds invest in it because they see it as quite a safe haven for their funds. But we have a slightly different view. One, yes, it's a safe haven in recession, because we're all getting older, despite the fact that we're, technologically advanced. We're the most infirm we've ever been. So, it's a growing business for sure. But we've also got that intimate knowledge as well. So that means that we can not only talk about this from a financial perspective, but also from a plate of empathy. So we actually put the person first, the patient at the end of the day. And we think there's a very good way that you can actually grow a business at the same time as doing right by the patient. And I think that's where we really separate ourselves. Okay,
sure. And then we've done some investments into dental practices, med spas, and what we've found is that, a health tech company is obviously very different than a dermatology clinic or a, operational, improvement process you do in a dental clinic. So what sectors are you focused on? Because I've just found that some operate very differently than others, and there's a whole new learning curve in some of these subsectors. It's not like every healthcare business runs like every other one, in my experience. So what's been your path on that, or your focus on that right now?
Yeah, so we've got a number that we're quite excited about. So one is the care home sector. James, the co-founder, he was 10 years at PwC as an accountant. Then he went on to be the head of mergers and acquisitions for HC1, who are the largest healthcare provider private in the UK, of 20,000 employees, 800 million in revenue, and he did 500 million in transactions for them over the last few years. So we've got a great knowledge of the care home space. And that in that space alone, we know by 2050, there's 200,000 too few beds available for the amount of people that are going to be over 65 and in need. So there's a huge area there of growth. Also, a passion of mine is, you mentioned med spas, hormonal health. This, I think, is a real growth area, particularly with GLP-1s sweeping the world over the last couple of years with the weight loss medications and peptides. Right. There's huge strides being made there, and I think the peptide therapy combined with now the next frontier of medicine being psychedelics as well, there's going to be a lot of big changes happening in medicine over the next decade or so.
Right. Yeah. I think that, cannabis got legalized in many states in the United States. And I feel like psychedelics are, on that same path over time, sometimes moving faster than other years, it seems, but it seems like it's on that path here in the US at least. And in terms of your deal sizes, what do you do to get around the fact that most of the time when someone has 1 to 3 million, or especially 3 to 5 million of EBITDA or profits, they're getting offers every month from someone. Do you just win them over with the advisory approach? And you're obviously providing way more than capital. You're really providing those insights and opening doors to distribution, et cetera. Or how do you compete out there in the marketplace?
Very much the latter there. So it's this full complement of services that we offer, where it isn't just access to capital, but it is access to networks, to supply chains, and to all of our existing network. And that's what really does separate us, I think, from the other people that are out there. Okay.
And what about deal size? Do you work with startups mostly, or 5 million plus in EBITDA? What's the focus?
So 1 to 5 million revenue, sort of 500,000 to 2 million EBITDA seems to be about the sweet spot before the multiples become too high, which are too large for us at the current stage of our own evolution, and too small, then it's just too much of a headache. I don't think they're quite ready to grow.
Right. Got it. And are you approaching it as kind of a find a platform company and then little bolt-on companies in the same industry, or if you have 20 or 30 holdings at Balmoral Partners, are you looking to have them all be very diverse in nature? What's kind of been your approach strategy wise?
So far, we've bought a medical supplies and pharmaceuticals business, a medical device company, a domiciliary care or home care company. We're just in the final stages of a care home business. We then have a dietetics company. We have a men's health company, and each one of those can be acquisitive. So the goal is that Balmoral Partners will have 25, 30 verticals, all of them broadly under that health umbrella, and each of those will be acquisitive. So it should very much be an accumulative thing. So with this first year, we're going to look to do 10 acquisitions. We've done 6 in the first half. And then next year, we'll have the 10 from this year, but we'll all hopefully do another acquisition, and then we'll have the new ones from next year. So the returns for our shareholders should just grow exponentially.
Sure. And then what about the timeline? So if you meet somebody today, like let's say that one of our listeners is in the healthcare space and they'd like to work with you, what's kind of the general timeline they should expect to, meet with someone like yourself and then actually negotiate and close the transaction? Is that 9 months, 3 months, 2 years? What's the general timeline?
I don't think there's a hard and fast rule that we've discovered. I wish there was. The quickest we've ever done something is probably 3 months.
Okay.
And this last deal we've just done, which we just signed at back end of last week, I started talking to them in 2019.
Sure.
So that's 6 years.
Right. Yeah. What about deal structure? Is there anything unique that you offer to CEOs that you invest into their companies, or anything unique you offer to investors on the deal structure side of things?
I think again, it comes down to the fact that we're quite dynamic. So there isn't just a one size fits all. We're not a cookie cutter solution where it's going to be X, Y, and Z, and you're going to get what you're given. We really do work with the founders, work with the senior management to make sure there is a good fit. So in some instances, it might be we come in with 10%. Some people, it might be more. Sometimes the senior management maybe want to take a stake, others they want to take a step back. So we can really be, as I say, quite diverse in our approach.
Sure. And what about fee structures to investors? What did you come up with there, and why did you take that approach?
So both James and I felt quite strongly that there shouldn't be great big fees coming out of Balmoral, which we've seen quite often over the years, and I think investors see through that quite quickly as well. So we have a management fee, a basic management fee that comes from the company, and that pays for headcount, and then all of the proceeds go back through to shareholders. Okay.
And then in terms of areas you're avoiding in healthcare, or types of CEOs you're avoiding, are there some red flags or some sectors you just really don't want to waste any time on yourself?
Definitely found that home care is a difficult sector to be in. After doing 4 acquisitions in that space, it's probably not one that we would go into again, for sure. In terms of who we want to work with, really, we're looking for growth-minded individuals, not those who already think they have all of the answers, and certainly people that we get on well with. Because for us, we feel business should be fun as well. You've got to enjoy going to work, and then I think you can really make a difference that way.
Right. What would be, after 30 plus years in healthcare, what would be like a number one insight or some sort of counterintuitive lesson about the healthcare industry, investing in healthcare, that maybe an investor who wants to allocate to 5 or 10 different groups like Balmoral maybe doesn't realize from the outside looking in, is just getting started on how to invest in the space?
I think one of the things that I learned quite early on, and probably because I am a healthcare professional at heart, and that's how I started, and most healthcare business owners are heart-led. They're not finance-led. And that will completely change how you have a conversation with someone. So if we go in there on day one and start asking for forecasts and EBITDAs and multiples of XYZ, it can make them feel quite threatened. And actually, that isn't why they started the business. They started with the business to change people's lives. And I think as an investor wanting to get into healthcare, it's really relevant that you appreciate that, because it will change how you build rapport and how you open a conversation with someone.
Yeah, that makes sense. Here in the United States, private equity has acquired so much of healthcare already that a lot of doctors do not like it because of what you said. It changes that dynamic. Now they're thought of as a productivity measures and KPIs and as a machine, and they have to see 90 patients every 2 hours, and just a bunch of things that make it so it's harder to deliver that care. And so a lot of times, some people in the healthcare space, are wanting to make sure that someone who actually cares about the actual delivery of value to the patient is left in charge after a firm like yours makes the investment, and it's not completely swapped out for some suit from private equity that just wants to grind everybody down, right?
Yeah, exactly. As you can see, I never go anywhere in a suit. I've got t-shirt, shorts, and a cap on most of the time. And actually, on a number of occasions, and this happened on more than one occasion, and it took me a while to figure out it was actually a positive, because early on, a number of people said, "We like you, Ross, because you're not a businessman." And it took me a while, and eventually I thought, you know what, that's actually really a real compliment, because they mean that I'm not there pretending to be someone I'm not, in a suit, just going to rip everything out of the company and drive profits. We do care about the people at the end of the day.
That's so funny. Yeah, I had my Lululemon V-neck shirt on before this, and I was like, you know what, I better put on a suit shirt in case Ross is a buttoned up, tuxedo cummerbund guy. So that's I can relate to that. I live out in Hawaii, and it's not the most formal culture in the world in the Hawaiian Islands, as you can imagine. So I think that at the end of the day, sometimes people that wear the fanciest suits are the lawyers and attorneys, or somebody trying to sell you something from an investment bank. And it's kind of like the way overdressed are usually trying to sell you something from a big corporation, is my experience.
Yeah.
Yep. What else should I have asked you that I have not yet, about your model, about healthcare, about investing in healthcare, etc.?
To be honest, Richard, I think we've covered most things. I think the one thing I really wanted to get across is firstly, it's our experience, our deep experience in healthcare. We're not just there talking about it. We've lived it. We've been in it for 30 odd years. Myself, James, and our senior advisor, one of our board members, have done over $1 billion of transactions in the last 3 or 4 years alone. So we're not brand new to this space, either as a provider or as a fund manager as well. So I think that's probably the most important thing. And then the second part, which again we talked about, was the fact there is this big difference between being heart-led and being putting the patient or the client first, and still having a profitable business as well.
Right. I think one thing that stood out to me, reviewing my notes here before we started, was just that so many private equity companies used to only look at 5 to 10 million EBITDA, and then if they were lower middle market, 3 to 5 million EBITDA. It seems like with your focus on 1 to 5 million in revenue, you're maybe catching some of these platforms before they get on the radar of the private equity firms that, at a very minimum, usually look at 1 to 2 million EBITDA to even be worth their time to look at. It seems like that's a pretty unique feature, that combined with the minority equity stake approach that you're open to. Those two things, to me, just from running our investor club for 18 years, I don't think I've met someone else in healthcare that really has that type of a focus. So that kind of stood out, in my notes while getting ready here. What's the best way for someone to reach out and get a hold of your team? Maybe they have a business that they invested in, or they were involved in a startup and now they're ready for private equity capital from someone like yourself. Or maybe they're a doctor, dentist, or a family office investor, and they want to invest back into healthcare, and they liked what you said. I mean, what's the best way for them to get in touch with you and your team?
Obviously through your directory would be one, straight to our website, which is balmoralpartners.global, or from a social media perspective, then I'm most active on LinkedIn. So just my name, Ross Tompkins. So I post on there several times every day. So that's a good place to get me as well.
Great. Sounds good. If anybody listening is already in an email conversation with myself, or you see me at one of our investor club events, just let me know if you need an introduction to Ross, and happy to do so. So I appreciate your time here today, Ross, and thanks for all your insights.
Thanks, Richard. Have a great day. Take care.